This video is about why financial freedom matters and why without it, your health, your family, and your future are at risk. Everything I share here is based on hard economic data shaped by mentors like Warren Buffett, Charlie Munger, Benjamin Graham, and Peter Thiel. So subscribe today and let's build your future together. Without financial freedom, you're defenseless against inflation, sudden market crashes, and the government is not going to help you. By the end, you'll see why owning assets and investing is necessary to cover the cost of living and hopefully one day retire. Poor decision making can set you back even further. So let's ask the big question. What makes financial freedom a requirement, not a luxury, in the next 10 years? The first is that inflation is outpacing wages and will erode your future. Financial crises happen and they hit hard. When the shocks hit, Congress and Wall Street protect themselves, not you. And once you see this clearly, you'll understand why it's so important to invest wisely or be left behind. The USDA data shows that prices are up 23 to 24% since 2020. That's about 6% per year. The Case-Shiller Index shows home prices are up 45% since 2020. How about healthcare? Have you been to the doctor lately? They're expensive. In 2023, the US health spending hit $4.9 trillion. That's about $14,570 per person. The essentials like food, housing, and healthcare, and costs are still growing faster than the economy. That's why working for money alone is not enough. If you want to see what your cost of living would be like in the future, let's go to a compound interest calculator. Let's take medical costs, for example. They reported that the average person is spending about $14,700. So if medical care continues to grow at 7% per year, in 30 years, the average person should be expected to pay about $112,000. That's why working for money alone is not enough. You have to invest wisely. Financial crises are more common than we like to think. Growing up, I thought the Great Depression was the only financial collapse that we experienced. And although, yes, it was tough, it was bad, we seem to have one every 8 to 10 years. The NBR data shows recessions in 1973 to 1975, 1980, 1981, 1990, 2001, 2007 to 2009, and then 2020. In 2008, unemployment peaked nearly 10%. And nearly 9 million Americans lost their jobs. Over the whole crisis, about 3.8 million homes went into foreclosure. In some of the worst markets, home values dropped about 40%. They had no home equity to rely on. It just evaporated, it disappeared overnight. I don't want to claim that history repeats itself, but it does rhyme. People believe that white-collar jobs are going to take the hit with AI and automation being able to replace a lot of white-collar workers. And when the storm comes, the harsh reality is that the system saves itself first. And yes, households got stimulus checks, but in California alone, over $20 billion in unemployment benefits were lost to fraud. Meanwhile, trillions in stimulus propped up markets, pushing stock prices higher, benefiting those who already owned assets. So every storm, the pattern repeats, the system gets saved, households take the hit. That's why you need to build your own lifeboat. Cash buffers, ownership, and multiple income streams, because relying on the government is just not an option. Let's return to the big question. Why is financial freedom required, not optional? Because costs are rising quickly. Crises hit often, and institutions protect themselves first. The only durable defense is to own assets that compound over time. So in the next video, we'll discuss how to build a portfolio that thrives in ambiguity, how to invest wisely, and benefit from volatility. Thank you for watching, and please subscribe, and let's build your future together.